Into this video, what we will be doing is performing a full breakdown in the market, both from a technical and in order flow perspective on a specific pair. And obviously, I will keep the analysis very educational so that by the end of the video, you will not only know exactly which area you're supposed to be monitoring for a potential trading opportunity, but you will also know which are the key elements that you have to incorporate in your own trading strategy, and that will immediately make you a better trader. Now, if you're new to the channel, I'm a top author on the TradingView platform, and every day I share a lot of free education and analysis on my platform. So I really suggest that you do subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. Okay, so it's definitely time to make an update on the situation that currently we have on Euro GBP. So in this video, I will first give you a full breakdown of the situation that we have on Euro GBP, both from a monthly, weekly, and daily perspective. Also checking obviously what we have from a COT perspective to see what the biggest banks and institutions are doing on the euro and on the pound. And by the end of the video, I will show you exactly which is the best zone to be looking for a trading opportunity. So make sure you stick for the full video because you will learn some very important key concepts. So let's start from our monthly time frame to see what kind of situation we have. Because definitely you have to check the monthly, weekly, and daily if you want the directional aspect of the market when you are swing trading. Now let's start from the monthly. Now on the monthly, clearly we have a market that has approached multiple times a very strong level of structure resistance. In fact, the market has tested the zone here, preceding this rejection to the downside. Again, the market tested the area here, preceding this rejection to the downside. Again, the market tested and rejected this area here, and lately the market has tested and aggressively rejected again this very strong monthly supply area that the market has clearly confirmed as the resistance that it currently has, at least from a monthly perspective. Now there is one quick trick that you can use here to understand where is the support. Now if we go and check what we have on a line chart, on the line chart you will see the closes in the market, specifically the monthly closes, which are very strong levels of structure, which in this case are here. Here's where the structure of the market currently is. Now we have the previous resistance, which is now turned support, and we can expect the market to go and test this level. So immediately from the monthly, we have a downside target that we expect the market to go and test after the market has obviously rejected the monthly resistance. Now that we have a target in mind, let's go down on the weekly and see what we have from a weekly perspective. Now on the weekly time frame, we can immediately see that the market went from creating higher highs as it was creating here to creating lower highs. And clearly we also have the candle, which the next one is supposed to fill in the wick. In fact, what did we say in our previous analysis? In our previous analysis, we said clearly we have a market which is shifting from a bullish to a bearish market on the weekly time frame. And we also have this candle here, which is definitely a bearish candle. We spoke about this candle many times. If you have a candle that is red and has a wick which is longer than 50% of the body, you expect the next candle to fill in the wick and be bearish. And in fact, that is exactly what we expected the market to do this week, and that is what the market is doing. Now, if you're asking yourself, why is that? Because the wick of this candle is simply an impulse and a correction. The wick is the correction that you will have on lower time frames. In fact, if we go down on the daily, what we can see? On the daily time frame, we can see that this correction here is exactly the wick that we have on the weekly, and we expected the continuation to the downside. In fact, what did we say in our two previous analyses that we made here on Euro GBP? We said, first of all, after the market has created this information, we want to see the market from here make a move to the upside and complete the pattern at the neckline. In fact, when you have an information, you expect the market to give you a move to the upside and complete the pattern at the previous support, which is now turned resistance. And from this level, you expect the continuation to the downside for the creation of the impulse correction and impulse pattern to the downside. Specifically, in this case, this retracement here is the wick that we have on the weekly time frame. So clearly both time frames were bearish and the market reacted exactly as we wanted, created the retracement that we wanted and created the continuation that we wanted. And I will link these two previous analysis in description so you can go and check them out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or speak about in the next videos. And where is the next opportunity for Euro GBP? Because if you capitalize on these two moves, absolutely great job. But where is the next opportunity for this pair? Now we must notice that at the moment we are at a very strong daily support area. In fact, from here the market had started all this move to the upside. Again, the market tested and rejected this zone to the upside here, and currently the market is testing and we are still above this support. So until the market will remain above this support, we definitely cannot be looking for any shorts because the market can easily continue to the upside and reject this support. But we do have a level that we know that the market could go and test. So how can we approach a situation where we have a target that is lower, but in between we have support? Now, before I show you that, let's go and give a quick check at what we have from a COT perspective on the euro and on the pound. So what the biggest banks and institutions are currently doing on these two pairs, actually currencies. If we go and see what we have from a euro perspective, we can see that institutions greatly in the long term shifted their positioning from the negative to the positive side. What does it mean? It means that institutions went from having way more shorts than longs with 271k shorts and 157k longs to a situation where we now have way more longs than shorts, so completely the opposite with 259k longs and 62k shorts. So they closed a lot of shorts and opened a lot of longs. But with the last report, we can see that some profit taking has started on all these longs that got added. In fact, institutions closed 6.8k longs. And if we go and see what we have from a pound perspective, we can see that the pound has been aggressively bought with the last reports, going from minus 25k net positions to plus 6.5k net positions. So clearly thousands of shorts got closed, and as you can see here, and thousands of longs got opened on the pound. And in fact, the pound has been very strong this week. Why? Because institutions were buying the pound. And we can see that the short exposure decreased massively from 36 to 25%, and the long exposure increased from 22 to 29, which is exactly what you expect. So strong pound and euro with some profit taking. But still, we don't know if the profit taking on the euro will be weak enough to actually break to the downside this level. But that is not our job, because our job is to react to what the market will show us, not try to predict the market. Our job is to position ourselves with the best risk to reward and best probabilities. So if the market will manage to break this zone to the downside, then all this support will be turned resistance here. And after the break, on the retest of the level, what we will be doing with students. Now, as usual, the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So inside of this area with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and for the market to complete this impulse correction and impulse pattern, and we will be capitalizing on this move to the downside with students. On the other side, if from here the market will reject the zone to the upside without breaking below the area, then simply we are not interested in this pair yet, and I will show you where the next opportunity will be ready on this pair. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me personally answering every single question that you have every day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in the program.